Thank you for joining us. And this is Business Incorporated on Channels Television. I'm Chimeze Obi Iwago. Coming up on the show today, Ghana and the UK finalized negotiations on new interim trade partnership agreement. South Africa suspends use of AstraZeneca vaccine. And Mozambique's business activity downturn accelerates in January. Let's get the show started now with the market numbers. And investor sentiments in major African markets we track here were mixed at intraday. While the JSE index in South Africa jumped 1.02%, Nigeria's main index sustained last week's negative trend and was down 0.35%. The EGX 30 in Egypt also followed suit and was down 0.13% at intraday. Kenya closed negative on Friday. And major markets in the Middle East were in the negative territory at intraday, except the market in Saudi Arabia, which jumped 1.35%. The Qatari index lost 0.46%. In the UAE, Dubai's main index declined the most by 0.89%, while Abu Dhabi's index fell 0.29%. And in Europe, stocks were higher today, with markets tracking positive sentiment in Asia and the US. Well, we have Chelsea Dulani now to give us update from the European space. Good afternoon, Chelsea. Good to see you. A beautiful week to you. Well, Germany's DAX has started the week at a record high. What's behind this optimism? Well, while we wait to get across to Chelsea there, let's look at the Asian market, where stocks were mostly higher today as investors monitored shares of China's tech giants following the release of new anti-monopoly guidelines over the weekend. In Hong Kong, the Hang Seng Index rose 0.11% to close at 29,319.47. Mainland Chinese stocks also advanced on the day. The Shanghai Composite was up 1.03% to 3,532.45, while the Shenzhen Component gained 1.748% to 15,269.63. Meanwhile, the Kospi in South Korea lagged regionally as it declined 0.94% on the day to 3,091.24. In Japan, the Nikkei 225 surged 2.12% to close at 29,388.50, while the Topix Index gained 1.75% to finish its trading day at 1,923.95. Shares in Australia advanced as the S&P ASX 200 gained 0.59% to close at 6,880.70. Okay, let's look at the markets in the UK. The FTSE 100 opened higher this morning, a gentle 35-point gain to reach at about 6,521 points. But let's see what has changed this intraday, and we have Juliana there to give us all the details. Hello, Juliana. Good afternoon. Well, online fashion retailer Boohoo has just announced it has bought Dorothy Perkins, Wallis and Burton for £25 million, completing the breakup of Sir Philip Green's Arcadia Group. How is that playing out in the market?
It's quite interesting, Chumi, because even though this is a positive story for online retail, once again, the hemorrhaging of the UK high street continues. They have snapped up three of quite significant parts of the Arcadia Group. Last week, ASOS got the biggest brands, which is Topshop and Miss Selfridges. Debenhams was also swiped up by Boohoo. But in early trading, Boohoo's shares were down by about 3%, and that's because there are discussions that there could be some online tax, that the Chancellor Rishi Sunak, just before the spring budget on March the 3rd, is looking at some of these major companies that have their prices and their shares have skyrocketed during the pandemic because there has been a massive transfer from the high street to online. And so there are concerns that Boohoo may be one of them. In the 3 months to December, their shares were up by about 40%, and their sales have more than doubled during this period. So what should have been a really good day for them has turned out quite not so good. So the FTSE All Share is up 0.55%. The FTSE 100 is up by 0.72%. But the domestically focused, mainly retail market, 250 FTSE, that's down by 0.17%. In currencies, the British pound down on the US dollar by 0.32%, also down on the euro by 0.11%, and down at intraday on the Japanese yen by 0.06%.
And while oil trends higher today, another interesting story to note involving BP this morning is that the oil company plans to use autonomous vehicles on its refineries this year. What are you hearing about this, and how much impact does that news have on the stock?
Not much, but it's quite a long-running story, and this is something we're probably likely to see more of. This involves Oxbotica. They are a UK-based startup. They've been going for a couple of years, but they're still considered a startup. And BP, the oil major, as well as some other Chinese firms, invested billions of dollars into this firm a couple of years ago so that they could start using their automated vehicles. And Oxbotica have been trialling some of these vehicles in BP's refinery in Germany. According to reports, it's been going well. They've managed to drive autonomously over 111 kilometres without any issues. And this is not just on a basic road. We're talking about, navigating through some pretty rigorous, complicated BP refineries. It's going well. This is something they want to be developing. Of course, we've been talking about autonomous vehicles and the usage of that for years, and not just in sci-fi films. I suppose on roads, it's still a long way off, but in some of the oil majors, especially when it comes to deep underground drilling and some very complicated research analysis, Oxbotica appears to have ticked all those boxes. So we'll have to wait and see whether or not this is going to be sooner rather than later for BP.
And there's an indication that the Crown Estate, the Queen's property manager, will earn about £879 million a year for up to a decade from the sale of plots for offshore wind. What more can you tell us about this?
Yeah, it's an interesting story. Surprisingly, none of the major news reports have picked up on this in the UK. But yes, as you said, the Queen's estate and the Crown and the Treasury will benefit over the next 10 years of about £9 billion because they decided to lease some of the Queen's seabed property, which, as you can imagine, is worth a lot of money. And when they decided to put it on auction last week, it had a lot of interest, most notably by BP, who have managed to snap up some of this site in the Irish Sea. And what a lot of these energy companies will be doing with this land is putting a lot of offshore electricity and wind farms on it. And this is this is what the Queen's Crown has said, the estate have said, is that it's part of trying to propel Boris Johnson's Conservative government's plans to make 2030 the year when each and every single home will be powered by offshore electricity. And with this deal that's been done with BP and some other firms, not all of the firms have been named in some of the reports that The Guardian have reported earlier today, it will be able to generate the electricity of 7 million homes. So I think what the British media are pushing out is that the Queen is assisting with offshore electricity, not really the fact that she'll be packing £895 million a year on top of her already pretty beefy estate.
All right, Juliana, thank you, and enjoy the rest of the day. Okay, let's get back to Frankfurt to talk to Chelsea. Yes, Chelsea, I was asking, Germany's DAX has started the week at a record high. What's behind that optimism?
Well, it has been a very strong start to the week for both stocks here in Germany and Europe, but really the entire world. The DAX at a record high. U.S. stocks also look like they're going to hit new record highs today. And another interesting market that we're following is oil. The price of a barrel of oil up above $60 for the first time in over a year. And all of this just really is pointing to the fact that investors are feeling pretty good right now about the path of the global economy. That's despite, of course, the continued rise in coronavirus infections, as well as the somewhat messy rollouts of vaccines around the world. But investors very much focused on the outlook for stimulus, including the $2 trillion stimulus package that is starting to move forward in the United States. That's really giving investors a bit of a boost at the start of the week here.
Yeah, and in Italy, Mario Draghi faces a crucial week as he seeks to form a new government after political divisions led to the collapse of the former administration. Does he have the support?
Mario Draghi is starting to get more and more politicians on his side in Italy. If you remember, Mario Draghi was the head of the European Central Bank throughout the financial crisis. People call him Super Mario because he's really seen as the man who saved the Eurozone, who saved the euro when it was at the brink of collapse. So he has very strong economic credentials. He's very well respected in the business community, but he's also trying to mend really deep political divides in Italy, which led to the collapse of the former government. So over the weekend, he did speak to two of the major parties in Italy, the Five Star Movement as well as the Liga. He seems to have gotten conditional support from both of those parties to form a government. This week, he's going to try and get more people, more parties to pledge their support as well. He's starting to work through his potential cabinet and some of his potential policy proposals. But right now, there is a lot of support among the business community, among economists. We've seen markets really rallying on this, but it's unclear if he's going to be able to really mend those divides that have been really dogging Italy for years.
Exports from the UK to the European Union fell by almost 70% in January as the Brexit transition period ended. Is this a temporary disruption or something more permanent?
Well, politicians, especially those in the UK, are trying to paint this data as a symptom of short-term disruptions. They're calling it teething problems as the UK ended the transition period. But there, of course, is a lot of concerns that the disruptions we've seen to trade between the EU and the UK are going to be more long-lasting, even though businesses have had years to prepare for the UK leaving the European Union. We saw really a lot of turmoil in the trading relationship over the past month. A lot of EU companies were having trouble getting shipments from the UK, and part of this is because there are a lot of new requirements that are being slapped onto companies because of the change in this relationship. They have to fill out a lot more paperwork. There are certain health checks, especially for food imports and exports. So it wasn't as seamless as a lot of people had been hoping for, and there is still really a ramp up to the full slate of customs checks, the full slate of trade barriers. That's not supposed to go into effect until July. So some of these kinks likely will be worked out as companies become more familiar with the paperwork requirements, with the bureaucracy requirements. But we're still seeing more and more requirements being put on. And a lot of companies are saying this is just too complicated for us, especially for smaller businesses. They're saying it's not even worth it to really be shipping products back and forth between the UK and the EU because we can't really handle the paperwork requirements. So it is causing some pretty long-term consequences for these businesses on both sides.
I thank you very much, Chelsea. Well, the week has just started, so we'll continue to follow up on those market developments. And in the U.S., stock futures rose this morning as the major averages look to build up gains following the best week since November. Futures contracts tied to the Dow Jones Industrial Average implied an opening gain of more than 100 points. S&P 500 futures and Nasdaq 100 futures also traded in positive territory. The S&P 500 closed at a record high on Friday and posted its fifth straight positive session for the first time since August. The Dow is also on its longest daily winning streak since August, while the Nasdaq Composite registered its fourth positive session in 5 on Friday. All right, we'll take a quick break, and then when we come back, we'll look at other developments here on the African continent. To stay with us. The precarious debt burdens of a number of African nations have worsened due to the economic fallout from the COVID-19 pandemic. The group of 20 major economies initially offered the world's poorest countries temporary repayment relief on debt owed to the official creditors under its debt service suspension initiative, and also launched a new framework designed to tackle unsustainable debt stocks. Now, Zambia, which became Africa's first pandemic-era sovereign default late last year, says it has requested a restructuring of its debt under the framework supported by the G20. What other African countries are likely to take the same route as Zambia? Matt Keniger, an associate practice lead at Frontier View, joins us now. Hello, Matt. Thank you for joining us again. Well, you cover sub-Saharan Africa. Which African countries are currently facing the greatest fiscal pressure? And in your view, is there a risk of more countries following Zambia into default over the coming years?
Well, thank you for having me on the program today. So certainly there are a number of African or sub-Saharan African countries that are facing quite significant fiscal pressure. Those include, Ethiopia, Angola especially, even Ghana, Kenya, and I would also say Mozambique are the ones that we are watching the closest in terms of their fiscal positions. Nigeria and South Africa also are facing extra fiscal pressure, but they're not nearly as bad as other ones I've just mentioned. The message really, I suppose, is that all major markets are going to face quite considerable public spending and fiscal pressure over the course of 2021, and this will be a feature of the economic landscape. In terms of whether we expect there to be defaults, our base case view really is that we don't expect there to be further defaults, and this is for a couple of reasons. One is that there are a number of debt restructuring initiatives, like the G20 initiative, that are taking place. Also, most of these countries that I've mentioned have engaged with the IMF to help them through these difficult periods. And additionally, many of these markets, including South Africa and Nigeria, can afford to borrow domestically. So we don't expect another sort of set of defaults in Africa over the course of the year.
So how will fiscal pressures affect the growth prospects for African economies over the next few years?
Broadly, I would say it's worth noting, I would say that the growth prospects for African economies are quite positive for 2021 and 2022. But I would say that the private sector really is going to be driving the recovery. Public debt is the single biggest risk to growth in 2021 across the continent. And we are expecting, as a result, governments to consolidate spending. Most governments are probably going to have to raise taxes, cut infrastructure investments, delay infrastructure projects such as electricity and transport infrastructure. And so overall, this will curtail growth rates. They are probably going to be 1 or 2 percentage points lower in 2021 than they otherwise would have been if there was not this significant fiscal pressure across the continent.
Now, as governments attempt to stabilize their government finances, how will the private sector be affected?
So there, in our view, there are probably 3 main areas or 3 main ways in which the private sector will be affected. So the first is that there certainly is going to be less public sector demand. So government, companies looking to get involved in infrastructure projects, sell to the government. Government departments are likely to cut procurement budgets. So certainly less demand from potentially very big customers in certain markets. Companies will have to adapt to offering cost-saving solutions rather than expecting very strong demand. The second major thing that companies should look out for from weak government finances is the likelihood of tax increases. So we've already seen governments increase taxes, but because governments are likely to undershoot their revenue targets at the beginning of this year, we are expecting tax increases. So certainly something to prepare for. And the other major implication of weak public finances is currency volatility. So, for example, South Africa, we are expecting a budget speech at the end of this month. And if a deterioration in public finances is revealed, that could drive short-term rand volatility. So in markets where public finances deteriorate, currency volatility certainly is a risk for businesses this year.
All right, Matt, it's always a pleasure having you on the program. Enjoy the rest of the day.
Thank you. You too.
And South Africa has suspended the use of AstraZeneca's COVID-19 shot in its vaccination program after data showed it gave minimal protection against mild to moderate infection caused by the country's dominant coronavirus variant. The health minister says the government will wait for advice from scientists on how best to proceed after disappointing results in a trial conducted by the University of Witwatersrand. The South African government had intended to roll out the AstraZeneca shot to healthcare workers soon after receiving 1 million doses produced by the Serum Institute of India. Instead, the government says it will offer vaccines developed by Johnson & Johnson and Pfizer in the coming weeks, while experts consider how the AstraZeneca shot can be deployed. Ghana and the UK have successfully completed negotiations on the new interim trade partnership agreement between the two countries. The new agreement will take effect immediately. Both countries finalize on their initial procedures to accommodate the concessions. As part of the new government, Ghana will get duty-free and quota-free access to the UK market, while UK exporters to the Ghanaian market get preferential tariff reductions. A joint statement from both countries indicates that this new agreement confirms their commitment to strengthening the long-standing trade and economic relationship that has existed between Ghana and the UK. In Mozambique's Purchasing Managers Index has fallen to 47.5 in January from 49.3 points in December 2020, signaling stronger deterioration in the private sector economy. Our data released by Standard Bank shows that output and new orders both declined sharply after having nearly stabilized at the end of 2020 as businesses cut spending on input purchases, leading to a softer rate of cost inflation. According to the report, the fall in January constitutes a solid deterioration in business conditions and the fastest seen in 4 months, in addition to being the largest since April 2020. And oil prices rose in early trade today, with Brent futures nearing $60 a barrel, boosted by supply cuts among key producers and hopes for further U.S. economic stimulus measures to boost demand. Brent crude for April touched a high of $59.95 a barrel, up 0.9%, while U.S. West Texas Intermediate crude futures advanced to 1% to $57.39 a barrel, the highest since January last year. A weaker dollar against most currencies also supported commodities, with dollar-denominated commodities becoming more affordable to holders of other currencies. Meanwhile, Saudi Arabia's pledge of extra supply cuts in February and March on the back of reductions by other members of the Organization of the Petroleum Exporting Countries and its allies, including Russia, is helping to balance global markets. And in metals, gold prices edged higher earlier today as weaker than expected U.S. job data reignited concerns over a recovery in the world's largest economy, pressuring the dollar and boosting bullion's appeal. Spot gold rose 0.1% to $1,813 per ounce, while U.S. gold futures gained 0.2% to $1,816. The dollar fell from an over 2-month peak on Friday after a U.S. job report indicated a slow recovery from the impacts of the COVID-19 pandemic. Among other precious metals, spot silver gained 1.1% to $27.12 an ounce. Platinum rose 0.7% to $1,130, and palladium was steady at $2,336. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.